Okay, guys, good morning to everybody. Today is the 22nd of May, 2026. CRAZII Global Market Talk with KEL. CRAZII, anytime, anywhere. All right, once again, before we start the morning, please remember that you must do your risk management first before engaging, all right? It's always very important to make sure that you know where's your risk before you look at the market. But of course, your reward is also similarly important, which means that if your risk and reward is 1:1, not so bad. But if your risk is 1:0.5, then it's not worth to take the risk, right? So usually my practice is that the risk and the reward has to be at least 1:2, if preferred 1:3. That will make more sense, okay? So let's go into the chart right now. I don't have much fundamental for me today, so I'll go to the chart first. All right, now for the chart wise this morning, let's take a look at gold. Okay, so before we talk about gold today, we just take note KTR -1 has been triggered on gold. If gold go below KTR -1, goes below, then that could be selling all the way to KTR -2, and that's about 4505 area. Yeah. Okay, so let me see. I can switch to 5-minute chart for a quick one. Oh yes, and then we can do that. Okay, the internet here is still not too bad. Let's not jinx it here. Okay, so if gold close below 4523, okay, then gold has a possibility to travel down to KTR -2, and pivot 2 is just stacked right by there. Okay, so I'll come back to this later. Yeah, let's just take note 4523, the very important number. The market must close below 4523. Then it will work. Okay, remember that. Yeah, hold on. Let me just put myself in the picture so you can see my facial expression. Okay, all right. So gold must stay below 4523. Okay, then it will go down. If it's just like what you're seeing right now, is hanging around there, that's not close below. Yeah, close below means the closing has to be below. So which means that this 5-minute has to be below, or if not, the subsequent 5 minutes. Okay. All right. So that is the thing to talk about for gold. Just let me go back to the day chart first. Okay. Okay, so let's start the journey on gold first. What happened over the last 10 days? Now, first of all, on this particular day, gold shoot up, right? We called for buy on gold on this particular day, and we made money from that. Congratulations to those who followed through. Then after that, when gold went up, it went sideways. We saw a 4 diamond appearing on your screen, and that was where I got a bit of concern, because whenever the market goes up, yeah, and I see a 4 diamond, right, there's always two sides of it. One, the good side is that it continues to go higher. That is a good side. The not so good side is that when you see a 4 diamond at the top of the uptrend, right, usually it could mean a reversal. Remember that, okay? So what I did was very simple. We put the diamond line, right? The diamond line, you put it here. Okay, diamond line. And then what happened? Now, on the next day, the gold traded above the diamond line. So that was so cool. We thought, that, okay, things is good because the market stays above the diamond line, and then things should be going higher and so forth, right? But as you can see from the screen, the next day, the market actually closes slightly below the diamond line. Now, this is where it got a bit of concern, because closing below the diamond line on the day chart is not a good reason. And you can see that there's a KCL, right? The KCL is here. Okay, hold on. With my hand, right? The KCL number, the line is here. So when the market purposely tests the KCL a few times, all right, it's like telling me something is wrong, because the market is supposed to be going up easily, right? But it didn't. So on the 4th day, which is the key day, when the market closes right below the diamond line, and if you look carefully, it closed below the KCL line. All right, let me just clear up the screen a little bit so you can see better. Can you see now? You see, the market, first of all, closed below the diamond line. Second one, it closed below the KCL line. So that was where I know that gold is going to fall. Okay. So on the next day, when gold open, and when it purposely touches the diamond line and couldn't go up, okay, this is a very typical sign that the gold is going to go down. Okay, now this not it happened after that. I'm saying this because we did it on that day itself, right? We go back to the onto our Telegram silo. We actually put over there that gold will come down. So what was the reason for that? It was because the market goes below OP, red candle, below MLP. All right. Now the KSI was green, so that's why we couldn't do a big size. We do a smaller size. And then after that, below diamond line. So out of the 5 key rules, OP, color, MLP, KSI, and the diamond line, only KSI did not follow through. So that's why our lot size was basically a sell big and not a sell big order. And when the market confirmed has closed below the diamond line very firmly, we notice that there's a KCB here and here, right? We have 2 KCB there, and the KCB basically tells me that where gold will likely be going. And truth be told, gold really follow through. On the next day, gold just sell. And on the day when we call for sell, many people were asking us why you think it will go down. And we tell them that that is what we can see from the day chart. So people argue back and say that, but KEL, the KSI is green. Now remember, KSI, if you look at the 5 rules, is on the 4th position. OP is always a king, the color of the candle, followed by that, MLP. So those 3 things already take up the first 3 part, right? So KSI is number 4. So if KSI is green, what you does is only for you to reduce or increase your lot size, not for you to predict the market. It does give you a reference point, but it doesn't tell you what the market will be doing. So you must understand the difference between the usage of the KSI. So what happened is that the next day, the gold continued to fall, right? But we know that KSI is still green, so we know that it will not close near the low. Okay, so got it now? That's how we can do the market, yeah? All right, very important for you to understand this structure here, okay? Okay, so now what's going to happen today? Let's take a look. Today is a doji directional day. Now, doji directional day, as we said it many times before, I'll do it again. When the market is a doji directional day, there's 2 outcomes. One, the market initially go above OP first, then the later part come down, or the market go down below OP first, then go all the way up later. Okay, so usually the key point is the KTR. If the market will go up to KTR plus 1 and start to come down, that is the start of a doji directional day. If the market go up to near to KTR plus 1 and doesn't go there, that's another telltale sign the market is going to be a strong sell. All right, so that is the common thing, that the market will purposely go up to KTR plus 1 or near to KTR plus 1 and then pull back, go and break below OP, then it will really sell. So vice versa, if the market goes down to KTR minus 1 or near to minus 1 and rebound and go above OP, that is another typical telltale sign the market is going to go up all the way later. So based on what we're seeing right now, gold has came down to KTR minus 1, right? And now it's playing around at minus 1. So is it a sign that the market later will go back to OP? We'll watch the market to decide. But for those who are trading now, you shouldn't be doing anything else. Okay, you shouldn't be doing anything else because from OP to minus 1 already done deal. So you shouldn't be doing anything else until it goes above OP or it breaks below minus 1. If you trade from this minus 1 to OP, I can tell you, you'll be grind by the market. That means that the market goes sideways and grind you all the way. So don't do that, yeah? Okay, so you can see that there's a KCB over here, and it tells you that we're about $42 away. So if you think that the gold will go down, you do have a downside of $42 from where we are right now. Okay, I think my screen is hanging a little bit, so the prices are not accurate. Yeah, so look at your handphone or your own desktop to see the price movement. Yeah. Okay, right. Let's take a look at the 5-minute chart again. So you see my point. So which means right now, right, either you are going to bet it to go down or you buy when it's above OP. Whatever is happening will happen over here. Do not trade. Why? It will grind you because the market now is going to, today is a DJDD day. So when the market is between OP to -1, OP to +1, after you get triggered, right, the next few movement, just don't touch at all. Okay, don't bother to touch until it goes below. Okay, so in this case right now, until it close below -1, if you still want to sell, you can sell down to KTR -2. If you want to buy, take my advice, buy only when it's above 8 OP. If you buy anytime here itself, there's a very good chance that you'll be grind by the market to go up, down, go up, go down. Because today, I already tell you, it's a doji directional day, right? So you don't need to take the risk. Okay, all clear? If all clear, how many of you online now? 52, press number 1 right now. So this is very important. That's why today I want to do this with you, because when I saw it's a doji day, I know that I need to come in to share this with you. Now, doji directional day usually is a highest casualty day. Why? Because the market grind you at the start before it move in the end. So a lot of traders can get grinded, basically get hit until they got frightened and then they miss the last part. Yeah. Okay. Thank you very much for those who text in the 1. Okay. So that is the goal directive that I can share with you for today. Now, next one is the Dow Jones. Let's take a look. Now, Dow Jones now, why is the US going up? It's because 2 days ago, yesterday, in fact, last night, the Dow came down first. Reason was because the Iran doesn't want to give back the uranium, or they want to put the uranium stay in Iran. So that basically is one of the conditions. And that's why the US threatened, and that's why the market fall. But then about a few hours later, they have something like peace treaty being done between Iran and US. All right, in a way. So because of that, the market pulled up and went all the way up because it's a good news, right? So oil came down, the market go up. So that's what's happening right now. But as I said again, the market today is really at an overbought area in my position. And also, very important thing itself, that the US bond market is a very curious level. So to me, is that we can buy Dow Jones. Just that, remember, we just do smaller contract. All right, because you don't want to be caught at the high side, and then it's very hard to recover. Now, today, the opening price for Dow is at 50,326. So as long as you stay above OP, you're a buyer, because it's above MLP, it's above KCL. So both tells you it's a good buy. So yesterday was a very good buy, and today is still a good buy. Yeah, yesterday was a better buy because the KCL was exactly at OP. And the boys are buying, the retail were buying, so that gives you double confirmation. And the MA30 and MA200 definitely give you the extra boost. So overall, why the US market is going up? Because you have all the positive side with it. The oil negative side is just the current situation in this Iran, the Strait of Hormuz, and of course the current situation with the US bond. But all these aside, you follow the rules. Right, as long it's above OP, yellow candle, above MLP, you're a buyer. No need to think, it's always like that. Okay, always like that. So if the Dow can go up, the Dow should be heading towards the next number, 50,697. Now we are at historical high level. There's no more KCB available. So we use a pivot as a target. Okay. All right. So that is the Dow Jones for you. Now let's look at the next market, which is the oil market. Let's see, can I bring it in? Now, oil market, I want you to take a look at this, okay? Is that now the price is coming down, right? Okay, and today is also a DJDD also. So the thing is that today, as long as the market stays below OP, below MLP to sell. The OP is 101.05. The MLP is 101.84. So below OP, below MLP is a sell, right? So now we are slightly above OP, slightly, yeah? Okay. Now, because it's DJDD, we expect the same thing will happen, right? So let's see the market move. Now, oil don't move normally in the morning. You move only like, let's say, 2 p.m. to 6 p.m. Then that's a first movement, yeah? Okay. Now, the boys are buying, the retail are buying. So this is interesting. Because if the market really performed what it did previously, by right, crude oil should go back up again to this point of 107. Now, if you remember back then around this area in early May, when the oil was coming down, the KSI was all the way green. And once the market found a base, the market recovered to where it started. You see that? So it is very possible for oil to go back to 107. But if oil go back to 107, that means that gold will have to come down. The reason why gold is going up today is because oil is coming down. And why is gold going up? Because we have this potential Iran deal softening. So usually in the past, whenever there's a war, gold price will always go up. But this time around, we can see very clearly it's not happening because of the inflation worry and concern. So that is why you don't see that the gold going up recently because of the war. All right, so now oil has traded below OP slightly. Now remember, oil is more for directional trading, meaning you buy and you keep. All right, it's not for really in out because the spread is big, the volatility is there, so it doesn't make sense to just buy in and put a 20-point or 30-point stop loss. You get hit by the market. No need to do that. Do a bigger one, let the market run, that'll be better. Okay. All right, now the next market that we are looking at will be Bitcoin. Let me see what I can click in. Okay, now Bitcoin, you can see, hold on. Okay, now Bitcoin, as you can see, is staying below the KCL level. That's why Bitcoin on this particular day, when it closes yellow candle, but there was a KCL, I got a bit worried. And when the market stay below the KCL, below the OP, no matter how, you just sell. And remember, how the market go up is how it comes down. So the KCV was here. That was a pretty big one. And we profited 2,000 points from there, remember? Yeah, that was on the Bitcoin. So now the thing is this, Bitcoin is going up. Boys are also buying. So by default, right, if Bitcoin goes up, it should be able to see the pivot 2. Now, pivot 1 and pivot 2 today are inverse on the Bitcoin. So usually when it's inverse, the market will trade within the range. So it's very possible today for Bitcoin to test the upper band, which is the pivot 2 at 78,000. 0.85. So where we are right now is about $500 away. Yeah, it is possible. Now, the only thing that is happening now for Bitcoin is that it's below the MA30. So there's a lot of selling pressure, but it's supported by the 200-day moving average. So downside wise, you can see the market is basically supporting it. Every time when the Bitcoin comes down to the MA200, you can see the Bitcoin get rejected from that point and rebounded, right? So that's why you can see the power of this MA in the chart. Okay, so for those who love to pick bottom, you can always look out for MA200 because that is a lower number. But do understand this, if you pick the bottom at 200, that means that you're very near to a possible breakdown. So if the market breakdown, you need to cut your position. Yeah, you cannot stay there because that you'll go down lower. Okay, all right. So one more thing for you all to take back is this thing called a 5-minute chart. Now this is the 5-minute chart for gold. Now this chart is only available for CMC or PTP student. But today I share this with you. I got my reason, yeah. Now first of all, this is where gold hit the 100% mark, right? And then we have the 5% rule, 95, 90, 85, 80. So we all know that 80% is a bear territory, meaning you take the highest point and you take a multiplication of 0.8. When the market goes below 80%, that is a bear territory. So what is crazy that on this point, right, you can see what happened now, everybody, and you understand why am I sharing this with you. On this particular day, the market hit the highest point, and then after that, the market reversed down all the way to the 80% mark. And once the market hit the 80% mark, oh my goodness, the gold buyback all the way to 95%. So it was a really good run over here itself, okay? But then, as you can see, very scary, the market stopped exactly at the 95. And when the market pulled back, it stopped at the 90. And it stopped at 90. Okay, only when you can see it breaks below the 90 firmly by closing below it, and you can see the candle purposely touching the 90, and that was where you notice it sell down to 85, close below 85, and that's why go back to 80. Now it stay below 80 for a long day, okay, one single day, because below 80 is a sell, because the robots will go in and sell, 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 sell. This is a typical robotic trading, all right? 80% mark from the all-time high, the market will just sell, they don't care. Okay, so after they sold, the other robots came in to buy, and you have a very strong fight over here, and the market went back to the 85% mark again. Now, at this junction here, everybody was expecting the gold to go up, right? But what you saw was not. The gold again closed below the 85% mark with a strong black candle. And then after that goes down all the way. But interestingly, it did not go to touch the 80%. So it rebounded, and this time around again rebounded and stayed at 85. No, you cannot realize that this is quite accurate, yeah. The 5% rule is very, very accurate. So if you buy near the low, you can aim for the next 5% power level. That's pretty cool, right? So when that happened, you can see that go down, stay below the 85% mark again. And that's why you can almost tell yourself that you expect to see the 80%. So if you know, right, the 85% mark is 4,758. Okay, the one at the bottom is 44.78. So which means that, right, the range itself is almost $300 every time you move. Now that's a lot of money. So that's why if you sell at 7557, example, you sell at 4757, just $1 below, you target 4479. Basically, after what, 7 days, you buy back with almost $300 again. So you understand my point now? Why am I sharing all this? Because this is a very interesting ping pong level at the moment. So now, why am I concerned here? Because this is something that you must take note. Now we've seen this. We've seen it before, so you see it again. I want you to take note. Let's take a picture of this. This is quite cool, right? The 5% rule. This is my own creation. Something similar to Fibonacci, but I do it in a different way. Okay, so now the thing is this. If gold come back down again, and we can see that there is 2 days already, the gold purposely stay above the 80% mark. So if the gold come down again, people who are adventurous, you can try to buy at 4478 again. If you're adventurous, you can buy at this number. Okay, but I want to warn you, if the market decided to sell because of whatever reason, maybe again due to war or something happened, then the selling will break down the 80% mark. And the last time we see something like this was just only in March itself. And the number, let me see, can I get the number here? Okay, wait, I don't think I can get the number. Never mind. We get the rough figure. It is somewhere around 4093, is it? For those can see, help me, do me a favor, what is the low level here? Check for me the low. I think it's about 4090 or 4095, right? So basically from where we are right now, 4478 to drop all the way to 4095 or 4093. All right, imagine that that's another $400. That's like basically a collapse in the market. All right, $300, $400. So that's why I want you to take note of this number, 4478. So for those who are adventurous, you can try to buy big from here to get a bottom out. If you think that it will break further, then you just have to wait for it to go down. Now, it's a very normal thing for the market to break down to the previous low, then recover. It's very normal, but there must be a fundamental reason. So I guess as much like this, if the war do break out again because of whatever reason, then